Hi dear friends, how are you all? Welcome to our YouTube channel HR Tutorials India. In this video, we'll be discussing how to calculate TDS on salary. Every employee will be eager to know what is the TDS deductions and what will be the net salary which an employee gets after all deductions. So this video will give a clarity for all the employees and helps in calculating the TDS on salary and how exactly the TDS is calculated and deducted from an employee's salary. TDS calculation on salary. TDS stands for tax deduction at source. The concept of TDS was introduced with an aim to collect tax from the very source of income. As per this concept, a person deductor who is liable to make payment of specified nature to any other person deductee shall deduct tax at source and remit the same into the account of central government or the income tax department. The deductee from whose the income tax has been deducted at source would be entitled to get credit of the amount so deducted on the basis of Form 26ES or TDS certificate issued by the deductor. The full form of TDS is tax deduction at source, and the concept of TDS was introduced to collect the tax at the very source of income. And as per this TDS concept, the deductor who is liable to make the payment of a specified nature to any person or a company who is a deductee shall deduct the tax at the source and remit the same into the income tax department. And the deductee from whom the income tax has been deducted will be entitled to get the credit of the same amount as deducted on the basis of Form 26AS or the TDS certificate which is issued by the deductor for the amount deducted at source. Section 192 of Income Tax Act 1961 deals with the tax deducted at source on salary. Your employer will deduct TDS from the salary payable to you. The salary you receive from your employer is categorized in income under the head salary, and he or she will be responsible for deducting TDS on an average rate of income tax based on the income tax slabs rates during the relevant financial year by considering your entitled income. The TDS deducted under Section 192 is reflected in Form 16, which is issued by the taxpayer at the end of the financial year. In simple words, Section 192 of Income Tax Act 1961 deals with the tax deducted source on salary. The employer of the company deducts TDS from the salary paid to the employee, and the respective TDS deducted will be paid to the income tax department on a monthly basis and will be filed on quarterly basis. And the deduction of TDS is calculated on the basis of salary slabs or the income tax slabs as per the relevant financial year, considering the saving estimations declared by the employee for that specific financial year. And the TDS deducted under Section 192 will be reflected on the Form 16, which will be issued by the taxpayer at the end of the financial year to the employee for the tax deducted for that specific financial year. How to calculate TDS on salary? Now let us see how exactly the TDS is calculated on salary. TDS rate on salary depends upon income you receive from the employer, based on which you fall into different tax slab rates. According to the tax slab, the rate of your TDS deduction on salary will range from 0 to 30%. Each employee has different salaries in a company, and as per the income tax slabs, the rate of TDS will vary, and the TDS deduction salary range will be from 0% to 30% depending upon the salaries earned by the employee from the employer for that specific financial year. The calculation for TDS on salary is done by deducting the amount of exemption from the total annual salaried income of the employee. The income tax department specifies the exemption limit. At the time of calculating TDS on salary, the employer needs to obtain proof and declaration from the employee before approving the exemption amount, which means the calculation of TDS on the salary of the employee in a company is reduced by exemptions from the total salaried income of the employee, and these exemptions has their own limitations which are specified by the income tax department. And while calculating the TDS on the salary by the employer for their specific employee, the employer needs to obtain the proof and declaration from the employee before approving the tax exemption amount. TDS on salary is deducted every month. As per the Section 192, the employer will deduct TDS on salary at the time of making the payment to the employee. Since the employee gets the salary every month, the employer will make a deduction for TDS on salary every month. In case the employer fails to deduct the same, he will be able to pay the penalty and interest, which means TDS on salary is deducted every month by the employer from the employee. As per the Section 192, the employer has to deduct the TDS on salary at the time of making the payment to the employee. Since the employee gets the salary every month, the employer will deduct the TDS and pay the same amount to the income tax department on monthly basis. And if in case the employer fails to deduct and pay the TDS to the income tax department, the employer will be liable to pay the penalty and also the interest. Step-by-step process to calculate TDS on salary. Now let us see the step-by-step process how to calculate TDS on salary. For calculating the TDS on salary, following is the data required, which is very important and mandatory too. employee salary breakup, employee investment declaration, HRA calculation, professional tax, standard deduction, income tax exemptions under section 80C, 80D, 80E, 80G, 80U and 80TTA, income tax slabs, income tax rebate under section 87A. So this is the information which is required for the employer to calculate the TDS on salary for a specific employee with respect to that specific financial year. Now let us see in detail about each step which helps in calculating the TDS on salary of an employee. Employee salary breakup. We have prepared a salary breakup for an employee named Mr. India with all the components like basic salary, house rent allowances, conveyance allowance, medical allowance, special allowance, other allowances, etc. for on monthly basis as well as on yearly basis. And we have calculated the gross salary with employer contribution, that is Provident Fund, Gratuity, ESIC. And finally the cost to company, which includes the Provident Fund from employer contribution, ESIC employee contribution, professional tax and TDS as per the income tax slabs. So these are the different components of salary breakup of an employee, Mr. India. For a CTC of 80,000 per month and annual CTC of 9,60,000 per annum. Employee investment declaration. So this is the declaration which is given by the employee at the time of financial year starting. Standard deduction, which is by default 50,000, house rent allowances, which he declared stating that 1,80,000 is the rent which is paid by the employee to the landlord for the accommodation purpose. Investment under section 80C, which has a limit of rupees 1,50,000. Under this section 80C, home loan principal is 30,000, tuition fee or children education fee is 25,800, employee provident fund is 43,200, life insurance premium is 21,000 and fixed deposit is 0. And the fourth exemption is professional tax, which has a limit of 2,400 per annum and he has declared 2,400. Interest deduction home loan 80EE limit is 2 lakhs, which he has declared 50,000. Education loan interest 80E no limit, which he has declared 0. Section 80D medical insurance premium limit is 25,000, which he has declared 20,600. Section 80TTA interest on savings, which he has declared 0. So these are the exemptions which are declared by the employee at the beginning of the financial year and which comes to 4,23,000. Now let's move on to the next step. HRA calculation. Now let us see how HRA is calculated. Details of components: actual basic salary, actual rental paid, actual HRA. So these are the three components which is already been taken from salary breakup and actual rent paid from the employee investment declaration form, and finally the actual HRA which is taken from salary breakup. So we have the three components on monthly basis: actual basic salary 38,250, actual rent paid 15,000, actual HRA that is 15,300. But for calculating HRA for HRA exemption, following are the three formulas which need to be considered, and whichever the amount is less is tax exempted. The first formula is actual HRA. So this can be taken directly from the actual HRA from salary component, that is 15,300. Then comes 40% of basic salary living in non-metropolitan city. As the employee in the current situation is living in a non-metropolitan city, hence 40% of basic salary is considered, that is 40% of basic salary 38,250 comes to be 15,300, which is same as the actual HRA. Then final calculation comes the difference between actual rent paid and basic salary, that is actual rent paid minus 10% of the basic salary. Here as per the investment declaration, we know the actual rent paid, that is 15,000 minus 10% of basic salary, that is 38,250. The difference between these two amounts comes to be 11,750. So as we know that as per the HR exemption formula, among all these three calculations, whichever is less will be considered as HRA exemption. Hence 15,300 are more than 11,175 rupees. Hence the HRA exemption is 11,175 per month, whereas yearly it will be 1,34,100, which is an HRA exemption on salary. Then comes professional tax slabs. As we have considered the employee to be from the city Telangana, so the Telangana professional tax slabs are applicable. As the salary of the employee is more than 20,000, the professional tax per month is 200, whereas per annum is 2,400. Income tax exemption. As per the investment declaration given by the employee, we had taken all the components or the exemptions given by the employee except the HRA. Because HR declared by the employee was 1,80,000, but complete 1,80,000 cannot be considered. Hence, we have calculated the HRA, which comes to be 1,34,100, which is an tax exemption under the section HRA. Standard deduction is same, 50,000 is straightaway taken, and investment under section 80C is taken because all the components or the investments under the section 80C is less than 1,50,000 for the specific financial year. That is home loan principal 30,000, tuition fee 25,800, EPF 43,200, life insurance premium 21,000. Altogether is less than 1,50,000 for that specific financial year. Professional tax is 2,400, which is exempted. Interest deducted on home loan limit is 2 lakhs and the declaration amount 50,000 is completely exempted. Educational loan interest is 0. Section 80D medical insurance premium limit has 25,000. He has declared 20,600. So completely exempted. So all the exemptions together comes to be 377,100. Income tax slabs for the resident individuals for the financial year 21-22. As the employee opted for old income tax regime, so we'll go with the option 1, old income tax regime, where up to 2,50,000 the income tax percentage is 0, 2,15,000 to 5 lakhs is 5%, 5 lakhs to 10 lakhs is 20%, and above 10 lakhs is 30%. Here the income tax slab for this specific person or the specific employee is in between 5 lakhs to 10 lakhs, which is 20%. Tax rebate, cess and surcharges. Tax rebate of 5% under section 87A for employees who are drawing an annual package of rupees 5 lakhs. Education cess. An additional 4% health and education cess will be applicable on the tax amount calculated as above. Secondary higher education cess. Surcharge. 10% of income tax where total income exceeds 50 lakhs up to 1 crore. 15% of income tax where the total income exceeds 1 crore. Which means there is a tax rebate of 5% under section 87A for the employees whose annual package is 5 lakhs or less. And there will be additional 4% of health and education cess which need to be paid to the income tax department on the total tax calculated. And finally, the surcharge of 10% to be paid extra whose income is between 50 lakhs to 1 crore during a specific financial year, and the surcharge will be 15% of the income tax where the total income exceeds 1 crore for that specific financial year. Income tax calculations. Here we'll see how to calculate income tax. Total taxable income per annum. To calculate what is the total taxable income per annum, we need to have the CTC and tax exemptions. As per the salary component or the salary breakup which is given by the company for the employee Mr. India, the cost to company is 9,60,000. Whereas the tax exemptions which we have just now seen after calculating the HRA and other components from the investment declaration by the employee comes to 3,77,100. So when we subtract the tax exemptions from the cost to company, the leftover amount is 5,82,900, which is a taxable income. But before getting into that, we need to check it out the income tax slabs as per which this salary is applicable. Tax as per income tax slabs. Here we need to check it out the income which is taxable comes under which income tax slab. As we have seen the income tax slabs for the financial year 2021-22, income up to 2,50,000 is nil, and income from 2,50,000 to 5 lakhs is 5%. That is, difference between 5 lakhs and 2,50,000 is 2,50,000, and the 5% of 2,50,000 comes to 12,500. And the income between 5 lakhs to 10 lakhs is of 20%. Hence, 5% tax has to be added to this 20% tax. As we have already calculated 5% of tax, that is 12,500, now we need to add to this 20% of the income. But we should not take directly 20% of 5,82,900. As the salary is landing between 5 lakhs and 10 lakhs, we need to take the 20% of the difference between 5,82,900 and 5 lakhs, which comes to be 29,080 rupees. So this is the tax which need to be paid by the employee for that specific financial year. But then, as we have discussed, that there is an additional cess which need to be paid, that is education cess plus secondary higher education cess, that is 4% of the tax. So 4% of 29,080 rupees comes to be 1,163. So by adding these two taxes, that is tax plus educational cess, together the total tax to be paid for that specific financial year is 30,243, and which is divided by 12 equal months comes to be 2,520. So 2,520 is the amount which need to be deducted from the employee salary as TDS on monthly basis, and to be paid to the income tax department and filed on quarterly basis. And the same deductions will be mentioned in the form 16, which will be issued to the employee at the end of the financial year from the company. net salary after TDS calculation. So this is the final salary breakup which has arrived after calculating the TDS that we have seen just now, that is 30,243 per annum, which is 2,520 per month. So after deducting the TDS from the salary, the remaining amount which is paid to the employee is the net salary, that is 71,980 per month, whereas 8,63,757 is the net amount which is paid to the employee on yearly basis. So dear friends, hope you understood how to calculate TDS on salary. In this video, we have explained step-by-step process and what are the exemptions, declarations from the employee and the salary breakup given by the employer, and finally how HRA is calculated and professional tax, and how we have calculated the TDS with respect to the income of the employee. And finally we have seen how the net salaries has arrived after deducting the TDS from the salary. So dear friends, if you have any queries or questions related to this video, please do comment in the comment section. I will be happy enough to answer all your queries. And if you like this video, please do subscribe and share among your friends. Thank you very much for watching this video. Have a nice day.